have it. The closing bell at the New York Stock Exchange on this St. Paddy's Day being rung by the folks at Guinness. U.S. stocks posted a third straight day in positive green territory. The Dow Jones Industrial Average is up more than 300, actually up more than 400 points.
The S&P and NASDAQ also seeing big gains. Both indices are up around 1%. Joining us now for more on this is Robert J. Johnston. He's an adjunct senior research scholar at the Columbia Center for Global Energy Policy in New York City. We've seen 3 days of rallies right now. There is a lot going on in the global markets right now and a lot influencing the market here. But I want to talk about oil for a second because oil is up almost $107 a barrel right now for May delivery. And to what extent do you believe that the U.S. ban on Russian energy imports earlier this month is still going to drive the market?
Yeah, the U.S. ban is definitely a big factor driving the market because what it's doing is really pressuring other suppliers and other importers of Russian oil who aren't directly affected by sanctions. It's really creating sort of political pressure for them or headline pressure, market risk pressure for them to impose their own bans on a voluntary basis. So we're seeing a lot of big traders and importers of Russian oil kind of in an informal way following the U.S. lead, even if their governments are not.
So the Fed raised short-term interest rates by a quarter percentage point on Wednesday in an effort to mitigate inflation. You know, as we're looking at the market going up, we're feeling happy about that until it comes to actually time at the pump and we're looking at these high gas prices. Do you think that the Fed's decision could be successful in taming high gas prices or even those other energy costs that we're faced with right now?
Yeah, look, I mean, we all know oil markets and gasoline markets are very cyclical, that, you know, higher prices will attract more supply and also discourage demand. I think if you add to that higher interest rates in the U.S. and elsewhere, that will help temper demand and prices as well, but it's not going to happen right away, especially if the Fed is on a very gradual tightening curve. And especially if the Saudis are kind of going slow and U.S. shale is going slow. And we end up with a 2 to 3 million barrel a day disruption in supplies from Russia. You know, it will take a lot more than 25 basis point hike from the Fed to turn that cycle around.
Mm-hmm.
Well, on Wednesday, President Biden tweeted that oil prices are decreasing. Of course, that reversed today. He said gas prices should too. And you mentioned that as oil prices go higher, that encourages more production. We could see more oil shale production here in the U.S. That gets profitable after about $60 a barrel. But it takes time to get that into the market. Do you think we'll see gas prices decline anytime soon? Can you explain why the decline and the other is not what the president means in saying that oil and gas companies, quote, pad their profits in this type of situation?
Yeah, certainly oil and gasoline prices are closely connected, but not perfectly so, right? There's a bit of a delay between additional crude supply and the time it takes for U.S. refiners to really improve their supplies and build up more inventories. Inventories of diesel are quite low. A lot of gasoline, is pretty tight as well. So I think I wouldn't expect that, relief on the crude oil side, which again itself will take some time. More U.S. shale, maybe deal with the Iranians to get more oil from them if in exchange for sanctions relief, more Saudi oil. That's probably take several months. And so it's difficult to see why gasoline prices would decline precipitously between now and then. Probably what we can hope for is that the expectation of more supply, first of crude oil and then of gasoline, will help prevent further price increases.
All right.
But remember also, we're heading that summer season, right, which is typically the strongest demand period for gasoline as well.
Yes, indeed. All right, Robert J. Johnston, thank you.
Thank you very much.